Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 12th of March, 2020. It's episode number 1711. There's a lot going on today, but I have to make this a quick one. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the markets are a lock limit down in the indices at 2601 in the March contract, um, and let me see, 2589.50 in the June contract. A couple of really important announcements this morning. I'm going to talk about just a refresher on how the lock limit works. But first of all, I want to remind you all that today is the official day for rollover on U.S. indices. Couldn't have happened at a worse time, really, um, given the volatility, the low equity in the book or liquidity in the book, and so on. This isn't a good time to roll to the next contract, but my data automatically rolls and back adjusts this morning because that is the official day. In front of you, you should see the rollover adjustments, which are really outstanding, very, very wide premiums here. The March contract settled at 27.40 and a quarter in the ES, and at 27.29 even in the June, and that gives us a backwardation of 11 and a quarter points, and you can see the rest of it. Everything's in backwardation now. So what this means is I'm forcing my data to remain in March today. So if you're a Convergent member and you're getting the stock zone areas and master levels and so on, including bookmap notes and the same for Ninja and Sierra charts, you're probably getting an error because you may be looking at March or June, but I'm remaining in March for this session until the volume kind of shifts forward, which should happen tomorrow morning. I'm hoping that tomorrow morning I can roll forward to keep things nice and neat, but here's where we are. So just make sure you know these rollover adjustments. If your data does not back adjust automatically, then you'll have to manually back adjust your data for it to be accurate. So if you don't back adjust your data, you end up with a gap zone that is artificial, that didn't really exist. Okay. I want to also remind you that starting today, the volume delta is going to be off. The volume delta is going to be, if not only is it affected by this volatility and the way this market's been trading, but it's now being impacted by spreads or people rolling into June or starting to roll into June. I'm expecting the roll to be done by next Wednesday, and next Friday is quad witching Friday. The second thing I wanted to go over is the rules for lock limit down, just so that you're all educated and aware and prepared for what is likely to come. Lock limit down. There are three limits in the rule book, in the CME rule book. There are three limits. The first limit is the Globex limit, which is 5%. The CME determines the reference price, which is not the same as a settlement price. People confuse that. It's not the same as a settlement price, and it's not the same as the closing price. The reference price is based on the VWAP price of the last 30 seconds of cash trading. And then from there, they compute 5% down and up. There's a limit up or down in the Globex session. Currently, those values are for the March contract I posted last night. That the reference price is 27.38 and lock limit down is 26.01. This is where the market's resting currently. Here's what it looks like on my, let's switch this over. Here's what it looks like on my bookmap, CT bookmap. Oof, sorry about that, wrong screen. Ouch, not sure what happened here. Wrong screen. Let me bring that in here. Uh, that's not good. Let me just fix this real quick. So frantic today. There's just way, way, way too much going on all at the same time. All right. So let me show you this. Here's here it is. It's kind of resting up against that 2601 area in the June contract. In the March contract and in the June, it's resting up against the 2589.50. So it's been lock limit down this whole session. But you know, once the market opens, if we don't get off this limit at 2601, then once it'll go into a halt for the last 5 minutes of the Globex session, at which point the 7% limit kicks in at the RTH Open at 9:30 Eastern. If the next tick down, which happened this past week on Monday, if the next print down exceeds the next limit down, which is 7%, there are only limits down on the RTH, no limits up. For today, that limit is 2546.50, 2546.50, approximately 55 points away. If we open on that print, then the market is halted, given that the New York Stock Exchange will probably also halt as the SPX index may be down 7%. Under that circumstance, the CME will hold, and the equivalent number in the June contract is 25.35, and then it'll pause until the New York Stock Exchange resets, which takes approximately 15 minutes. Last time it took about 19 minutes. It resets, and then we have it starts to go through the pre-opening process where orders can be entered into the book, and then it determines an opening price, and then it immediately goes to 13%, which in the March contract is 2382, 2382, and in the June contract is 2370. We got close to the 13% limit last time and bounced up. And then trading continues until we reach that 13% limit, at which point the New York Stock Exchange halts, and so does the CME, and we repeat this process for the last limit, which is 20%, which in the March contract is 2190, and in the June contract would be 2178.50. That's how that whole thing goes. In the last, I believe, 35 minutes of trading, it doesn't matter where we are. All limits are removed except for the 20%. So the market's allowed to drop to the 20% limit without any halts or pauses in the last 35 minutes of trading. So just be aware of that. Again, we're limit down this morning again. Hopefully you're not participating or don't have an open position. I'm going to run through what's left. There's a lot that came out this morning. Of course, we had the Eurozone rate decision this morning. They remained stable. They did not change their rate. The expectation was a potential drop of 10 basis points. Initial claims came in at 211,000 versus 222 expected, which is better. PPI came in at negative 0.6, expecting zero, so that's worse. And then what's remaining is really nothing. A 30-year bond auction at 1 Eastern. Okay. I'm not going to spend very much time on this. Here's what I expected yesterday. I expected a drop and a push higher. Expected an inside day. Alternatively, if it pushes up into that 2803, 2800 area and is unable to hold above there, my expectation is it would likely turn and go to 2700. And that's basically the scenario that worked out. Scenario 2, here's what things looked like yesterday in the March contract. Again, reminder that I'm going to stay on March for today. So here it is. We test up on the open on this 2800 low volume node. There's a fair amount of stuff going on here yesterday. Tested the 2800, couldn't hold, so it's shorts all the way. And the expectation is a test of this 55 area, which we got the 56 for a bounce all the way back to the open. That had me kind of thinking something has changed, and we were putting in a higher low, and therefore potentially pushing through 2800 and then starting to make a run towards the 2865 area. That did not happen. It failed at the open, which is odd that it's respecting the day time frame levels, and then it took out the low of Tuesday at 28.50, and it took out the low of Monday by about I think 12 points or 13 points or something like that before the bounce, and it bounced right back up to the mid area before it held steady. Yesterday was basically a trend day down that developed late. The market was in price discovery mode, and it leaves us with very little beneath to contend with. You can see there's a naked point of control at 77. There are levels down here to pay attention to, but we are down at 2601 right down here. That leaves us with a pretty sizable gap. If we open here, of course, if we don't open here and we flash down to the next limit, as mentioned, then that gap is even wider. So the expectation on this changes slightly. Here's what the overnight session looked like. The ranges are incredible. This is the overnight session. Oh, let me switch this to the March contract. Just, it seemed as the president was talking, the market was selling. I don't think the market's happy with the stimulus. Of course, it's not happy with the fact that there's a 30-day quarantine of a 30-day ban on travel. The travel industry or the airline industry is expected to take a $110 billion loss as a result of this. The travel industry is definitely struggling, and that'll show up in earnings, and this is where the stocks are responding, and so the index responds as well. And so that's where we stand, and we've been holding steady here at 2600, 2601 the whole evening. So this is not looking very sharp for those who are long. If you recall, on Tuesday I talked about the history um, of these drops, these impulsive drops, not being ones that would drop and then rally immediately, that normally there's a follow through day, and that we are likely to have some sort of a follow through when that happens. And that's pretty much what happened yesterday. So that's where we stand. Let's move on. Uh, just 1 second. Okay, let's move on to what's expected for today. There really is no clear expectation for today. I would be completely BSing you if I say that I knew what was going on. The important thing to remember is 2601 is the current lock limit down. The next one down is 2546. So somewhere in here. And what I'm expecting is that the market is likely to end up down here. And beyond here is 2382, which is way down here. So I'm looking for the market to skip down, reopen potentially a little bit lower, and then consolidate, sell off, have the last margin calls, liquidations, and so on. Remember, this is a very stressful environment for clearing firms and brokerages as they look to minimize the losses of their clients And the only way to do that is for clients to either pledge more money or for liquidations to take place. In either case, they'll do their best to limit debits. Remember, these are leverage products, which means you can lose more than the value of your account, and I'm sure many people are. So once that's done, once the flush happens, we will likely stabilize and start to move back towards this 2600 area is what I'm looking for. This is essentially what happened the other day. This is kind of the normal course for lock limit down days in the market. The market generally has digested or has done the damage by the time we open, and of course has done the damage by the time these poor folks get out of their long positions. And that's where we stand. I cannot provide more insight than that. I would be just making stuff up. But pay attention to your lock limits again. 7%, 25.46. I'm going to put them down here just so you guys have them. 25.46.50. That is the first threshold. The second threshold is 23.82 even. Okay. That's the 13%. And then the last one is 21.90. Hopefully we do not see that today, or we don't see anything below the 7% by much. So this is for the M0 contract, for the March contract, for the June contract. Just reduce these by about 11.5 points. That's the premium. Okay. So that's where we stand. Good luck, and hopefully you're staying on the safe side and you're not playing these limit down days. I know many people like to be short into a limit down, but it's a significant risk. Good luck. I'll catch you tomorrow morning. Take care.